My name is Josh Hoagland, and I'll be presenting on the business strategy screencast for the F company, Flying Souls. Flying Souls has been focused predominantly in wholesale marketing and occasionally catering to the spikes in online retailing trends. Investor interests include earnings per share, credit rating, return on equity, stock price, and image rating. Flying Souls has incurred approximately $8 million in debt for expansion of the production into all markets except Latin America, and has used equity shares to finance operations periodically. We have been slowly growing operations and limiting our debt by cash flowing these expansions in addition to buying back approximately 10 to 20% of outstanding stocks annually. We have found ourselves approaching a market share stagnation position due to lower than industry growth and rivalry outperformance. We believe this is due to our focus strategy. The company has been following a focused differentiation strategy by a narrow market buyer segment or market niche and outcompeting rivals by offering niche market members customized attributes that meet their tastes and requirements better than rivals' products. At this point, the company is reconsidering the competitive strategy by moving forward to a broad differentiation strategy. Given the largest players in the industry focusing on the center point here, providing the best cost provider strategy. The largest competitors in the industry have consistently provided a broader product line, and this has proven beneficial to supporting a larger customer base. With our shift in focus under the new strategic plan, we will begin focusing on increasing our product line, offering models in excess of 100, contrary to our prior 50 to 100 models. We can continue to keep the niche market currently offered. However, we will be expanding our model selections and continuing to include our attractive qualities to each design. The data shows that a rise in S&Q rating, the pricing similarly followed. Under the new strategy, the company will continue our focus heavily on increasing our S&Q rating and in turn a slight increase in pricing, which will also parallel the market and allow a new focus to become more attractive to the market share as a whole. This will allow us a competitive advantage to outsell companies with a lower and similar S&Q rating. Flying Souls will focus more heavily on the percentage of superior materials used, new features and styling, total quality management and control programs, cumulative expenditures for total quality management control efforts, and greater emphasis in expenditures to train workers in the use of best practices, and move towards the middle of the road cost of production concurrently. Although we have achieved net sale revenues in excess of 60% of our competitors, we are also among the highest of cost of pairs sold. This is a result of aggressive promotional opportunities and marketing capacity in excess of 108%. Going forward, Flying Souls has created a strategic implementation to become aggressively competitive with the largest of 4 players in the industry by providing a high-quality, middle-cost product and increasing our presence in the private label segment, similar to the beginning years of production. Using our strategy under the Porter 5 Forces model provides a platform to explore the industry and our competition. This model outlines the threat of new entrants, bargaining power, suppliers, and bargaining power of customers, threat of substitute products, and competitive rivalry within the industry on Flying Souls. This will be a base point for our future plans. In sum, the company has been following a focused differentiation strategy by on a narrow buyer segment or market niche and outcompeting rivals by offering niche members customized attributes that meet their tastes and requirements better than their rivals. At this point, Flying Souls will be moving towards our strategy to a broad differentiation strategy, given the largest players in the industry providing a best cost provider to an overall low cost strategy. This will ensure a continued large market share and competition with the larger players while continuing to provide quality products to the marketplace as a whole.